I'm Chris Preston.
And I'm Brad Simmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network. Brad, happy 4th almost. We will be off next week because the next episode is on the 4th, so we're taking a mid-year break. But we're both here today, which has been a rarity of late, so lots to talk about. So let's go to all of it. Do you have any big plans for the 4th, by the way?
No, no, nothing. We never really got traction with any kind of plans. Like I remember growing up where we'd go and see fireworks on a regular basis, and we just never really adopted that as a family. What about you?
We go I'm on vacation with my family, a place called Fisher's Island off the coast of Connecticut. And there's a fireworks element. The mosquitoes are really bad there, so it's kind of we might be over the whole battling mosquitoes to watch fireworks thing, but we go to the beach and all kinds of stuff. I might play some golf.
Oh,
Um,
nice.
yeah. So
I, I
yeah.
guess if you've got like a smartphone and tablet, I think fireworks maybe just lose their appeal. Is that like societally have we just aged out of fireworks? Is that
I
where
don't
we're at?
know. Yeah, I don't know. I mean, a lot of people still go to them where there, but I think you probably reach a certain age where you age out of fireworks, where you've seen them, seen one, you've seen them all. But
They
our
they
kids
are
still used to like them.
They are a little bit of a source of infuriation here because Arizona obviously is always a fire risk.
Right.
And for some reason, there are people in the sort of neighborhoods around us that will just randomly set them off at any time during a 2 week span around holidays, which is
Yep.
uh frustrating, irresponsible, illegal. I don't know.
Yeah.
First world problems.
Right. Okay. Let's get to the market. Tell people what we're gonna talk about today.
Market shrugs off conflict in Iran. That I mean, in retrospect, I guess that was maybe to be expected. Tariff deadlines still ahead of us, but we've got developments there. Then we'll do a little bit of a market economic news roundup. And then at the end of it, Mike Cintolo is going to join us to talk about growth stocks and leadership that he's seeing and how that segment of the market is progressing now that we are sort of officially trading at new all-time highs. I mean, we'll see if we close there, but for the time being, it looks good.
And before all that, we will do defend the take, and you're up this week. Your take, for which you have 90 seconds to defend. Large cap stocks will achieve double-digit return over the next 12 months. You have 90 seconds. Go.
All right. So one of the we've talked wall of worry, we've talked money on the sidelines, all these sort of factors that are under the surface that are good for stocks in general. One thing that we have not talked about recently, Golden Cross on the S&P 500, so shorter term moving average, like the 50-day crossing over the longer term, the 200-day. So I went back and I looked at the last 8 times there was a Golden Cross on the S&P 500. 2019, 2023, 2009, 2010, 12, 15, 16, and 20. Of those eight golden crosses, only one resulted in negative returns 12 months later. And that was the cross in 2019 in March, because that 12-month period ended in the midst of the COVID sell-off. But despite that, the market was only down 12% year over year. In every other instance, we had positive returns, and that includes in 2015 when we had a golden cross that then flipped and reversed. So the 50-day crossed up and over the 200 and then went back below it. On average, a year after the golden cross, the S&P is higher by 13.25% over the last 25 years. Or I'm sorry, over the last 20 years. So clear sailing ahead. I mean, the technicals are set up, the fundamentals are set up, there's cash on the sidelines. Everything seems really well positioned for the market to continue trading higher. And I like it. I like how we look for the next 12 months.
Wow, you almost perfectly hit the post. Yeah, I agree with that sentiment. I think there could be some, especially now that we're back as of literally as of this recording at all-time highs, the intraday highs. I think it could be a bumpy road next few months. But I think we'll be probably higher by year's end, and then certainly next 12 months, I think double-digit return, um, would make a lot of sense, especially given, how flat things have been, first through the first half of the year, a little less flat now than when we were sitting here a week or two ago. But yeah, I believe in a lot of those technical indicators. There's a reason that they have the success rates that they have. Mike points to who, I'm sure Mike can talk about this a little bit when he comes on. Mike has several indicators that, so many of them, you know, throw in like sentiment being as low as it's been. So many of them have pointed to higher prices historically in the ensuing 6 to 12 months, especially 12 months. So yeah, I don't really have any notes. It's if you're being optimistic, I can't in good conscience go against that.
Well, I mean, part of it also is driven by a weakening dollar. US dollars lost 10% in the last, uh, I guess going back to December is when maybe its all-time highs were. So in the last 6 months ish, um, which because the US is sort of a global investing destination, mutes some of it. So it's like the dollar weakens, but because these dollar valued assets are being purchased overseas, they also rise. So there, it maybe won't feel like a double digit return in people's day-to-day lives, right? As imports get more expensive and maybe some other goods get more expensive. But from a raw numbers standpoint, it definitely feels like everything's lining up.
Yeah. Okay, well, let's get to the market. Um, like I said, as of this recording, who knows where it'll finish the day. We are at new all-time highs in the S&P, which is not something I thought I would be saying a week ago here, or I guess whenever it was that we bombed Iran's nuclear facilities last weekend. I was with some friends and said to them, "Oh, this could be a nightmare for the market. Maybe good for oil stocks, energy stocks the next few days." But as quickly as it escalated, just as quickly died down. Apparently, there's kumbaya out there between us and Iran, and maybe less so Israel. But whatever it, whatever fear it may have caused in the market didn't last more than what, a few hours, and S&P is up, more than 3% this week. Um, I, the market truly is climbing the wall of worry the
Yeah.
last few weeks. There's been nothing but worries out there, existential threats between the tariffs, which we'll get to in a minute, and sort of mixed economic data, which we'll also get to, and then these escalating tensions in the Middle East. Um, but it's clear that the market wants to go up. It's clear that the Bulls are in firm control. It seems like, they lost it briefly in what, late March, early April, maybe most of April. Um, but they've wrested control back, and the market seems Teflon right now. I mean, it was in a bit of a malaise until the last couple weeks, sort of just going sideways for a while, but seems like we're headed up now. Existential threats be damned.
Yeah, I think, I mean, a part of me is wonders whether the market is, and like I suppose individually investors are taking some of the wrong lessons. There is a boy who cried wolf vibe around right now. It's like,
Mhm.
okay, well, tariffs are going to hit and they're going to be a big deal. It's like, okay, well, then we saw a lot of backpedaling there. It's like, okay, well, conflict in the Middle East. I mean, on the one hand, it's an old SNL Chevy Chase bit, right? There's new this week, war in the Middle East.
Yeah.
The market, the lesson the market has taken in the last 2 months is probably partially a reminder of what the first term of President Trump was, which is a lot of bluster and a lot of promises, and then not necessarily a lot of meaningful movement, or at least not meaningful market shifting movement on policies and things like that. Um, there was a ton of face saving. I mean, the Shah of Iran coming out of hiding and saying they've delivered a great slap to the U.S. after giving Qatar advance notice of where they were sending missiles is a face saving move, right? That has we've seen that kind of escalation play out a fair amount in recent history, where somebody has to get the last word, so you can give it to them. And I guess the escalation risk is if you get to a point where the president decides that he has to have the last word, and they don't want to let him have the last word. But yeah, for the time being, I don't know what. I guess when we get to like Q3, Q4, and we see maybe the actual economic impact of tariffs, assuming that they are rolled out, maybe that changes the calculus. But for the time being, the market is calling wolf, or calling the boy who cried wolf on
Hmm.
all of these developments without really a lot of fear behind it. You know, these developments and these policies are loudly proclaimed and then get gummed up in the court systems or get walked back or get delayed.
Yep.
And we'll get to that with tariffs. That is the lesson that the market has taken away from the first 6 months of the president's second term. And I think that lesson will remain in place until there's a compelling reason for it to not to.
Yeah, let's get to tariffs. It seems that you're especially the believe it when we see it, boy who cried wolf kind of thing, especially applies to tariffs. I had thought, I had a take, which was right a few months ago that, buy in May. But the second part of that, which I said more recently, is that I thought that selling would start to creep back into the market the back half of June and first half of July, ahead of July 9th deadline on all the 90-day pause on, some 130 countries tariffs. Seems like that's a pretty loose deadline at this point. And while there's been no real deals, Trump did say something about a deal with China. I don't know if that's actually official.
No, it's an agreement to a framework for making a
Framework.
deal.
Yeah.
I mean, it's more overpromising, not even overpromising. It's more overstating of what
Yeah.
the actual terms are. But the White House press secretary said yesterday that that it wasn't a firm deadline, that there could be more delays. It was up to the president's discretion.
Hmm.
Um, I mean, I get like if you don't have like a core policy framework that's built on a deeply held belief, you can just sort of play fast and loose with all this stuff.
Hmm.
Um, it's not like blanket tariffs are a an important policy uh, to implement for any kind of ideological reason, right? It's just the president signing executive orders and then applying whatever he wants. And then, so if they don't stick, it's not like he's going to fight tooth and nail to reapply them. They'll just move on to the next thing. I mean, that's
Yeah.
the boy who cried wolf again. Is like
Yeah.
it's not like he's standing by his uh by these core tenets of his personality that tariffs have to be implemented. Like, no, he wants to get headlines and he wants to uh, get the best deal and get treated fairly. And if it doesn't work out this way, so be it. They'll move on to the next thing.
And tariffs aren't scaring people anymore. That's very clear. Volatility, at least as measured by the VIX, is at its lowest point since late February, which coincides with the previous market high. It's in the 16s. It was as high as, I think it touched 60, which is like, near historic highs in right after Liberation Day, April 8th. And it's pretty quickly, came down, but now it's, we're back to like just calm, normal, calm levels. I mean, I know there was, a couple of years ago, we were in the 12, 13 range for the VIX. It's not quite that, but this is calm in the market, at least going by these days as measured by 2025. Um, Nothing is really scaring people, and I think it is because none of it's new. Well, most of it is not new. Now, us, committing an act of war uh, on Iran over the weekend, that was something new, but it was quelled so quickly and sort of dismissed as not a big deal so quickly that it sort of went back to business as usual. And so, like you said, it's tariffs are nothing new. Conflict in the Middle East is nothing new. Um, the economic data, which we're going to get to, is a few decimal points in either direction of what it's been, but it's basically same as what it's been. It's fine, not taking off, but fine. So the status quo is helping this market right now. There's no real surprises. Well, at least not in the last 4 days.
Yeah, that I guess that's the silver lining of these sort of self-imposed crises.
Yeah,
It's easy enough to back away from them. Obviously the big bill, I refuse to call it the big beautiful bill. That sounds absurd. I don't feel like I can say that with any seriousness. But
yeah,
the single bill, trying to roll all of your legislative policies into one bill and pass it, that seems to be hitting some roadblocks. So maybe that doesn't get passed. We have the debt ceiling to contend with, and obviously our borrowing is spiraling, but it's been spiraling for 25 years at this point. Uh,
yeah.
so like none of these are new, but I will be curious to see how the market responds when we encounter some difficulty that is not self-imposed in the event that we do. I think until we get to Q3, Q4, I know JP Morgan or Bank of America just had an analyst note that is basically saying it's a green light for the next 6 months at least. Um, so I don't know. I can see things on the horizon that could be problematic. But for the time being, for the probably the rest of the summer, I guess seasonality when that comes into play in like September, end of August, early September, when all the traders are back, maybe that's the next line that we've got to cross. But for the time being, the beauty of self-imposed pain is that it can just go away when somebody changes their mind. And
Right. Yeah, that's right. Um, okay, and let's get to number three. Economic data. You said there's a bunch that's come in. GDP was revised. Do you say up or down?
uh,
It is worse than it
yes,
was initially thought.
yeah,
Q1, it fell by 0.5%, where it was first reported. Was it 0.2, I think?
point 0.3.
0.3.
So it was originally reported at 0.3% declining growth down to 0.5%. This is the last revision for first quarter GDP. Um, we also had, I mean, weekly jobless claims, 236,000. That's a little bit lighter than the week before, but recurring, meaning been on the jobless rolls for a week or longer. Recurring jobless at 1.97 million. It's the highest since November of 2021. Personal income for the month of May fell 0.4%. They expected a gain of 0.3%, and then spending down 0.1% versus a gain of 0.1%. And then inflation also a little bit higher than expected. And it all seems to sort of point to the same thing that we've been sort of dealing with under the surface, which is the labor market's not super great. It's not high flying. Obviously there's some recency bias with the labor market because a lot of people that are out there maybe looking for work remember the pandemic era where there's two jobs for everybody looking for one. Hiring was going nuts. Pay raises were coming in quickly. Um, so setting aside maybe some of that recency bias, it's not a terrible labor market. It's not great. Um, And then income changes, I don't have a great explanation for. Spending changes could simply be as much as people were front loading big ticket items ahead of the imposition of tariffs, which is reflected in the breakdown of spending, durable good spending in April was much, much higher than in May, and it reflects people front loading big ticket items like washing machines, cars, et cetera, et cetera. So it's we're sort of steady as she goes.
Yeah.
Nothing particularly unexpected about this. I think that the labor market is probably a pain point and will probably continue to be so, but it's not cataclysmic yet.
Yeah. Do you remember the Seinfeld episode where Costanza is interviewing interns for whatever? I think he is like appointed chair of the board of his wife's or fiance's charity or something. He interviews all these guys who are like, straight A students, good looking, went to all these great schools. He doesn't want them, and he finally finds someone who reminds him of himself. A not terribly in shape guy who's made C's, and went to community college or something like that, or maybe it wasn't that, but he hires him, and he's sells it to the board as he's C grade. It's not falling behind, not showing off. I feel like that's this economy right now. It's doing enough. You can C's get degrees, as they say, and I feel like that's what's happening with the market now. As long as it keeps getting C, I mean, it's probably better than a C economy right now. It's more like a, I don't know, B minus, and that's good enough right now, it seems.
Yeah. I mean, the other thing is like business sentiment. If the tariff thing sort of gets behind us and then business sentiment picks up and then hiring picks up and then wage growth picks up again, right? Like I can see all the ingredients for a booming economy if we just keep going on for a little bit, if we just keep holding on tight and get through this tough spot. And then maybe, yeah, so I don't know if you remember in like 2019 or in 2020, it's like, well, we had 2 quarters of negative GDP growth.
Hmm.
And there was a lot of conversation of, well, nope, we're in a recession. It's like, well, that's not how there's one board that decides whether we're in a recession. But a similar sort of I could see a similar sort of outcome where people will look back at this a few months down the road and say, well, yeah, we were pretty close. Maybe this should have been a recession, maybe not. And it ultimately is maybe a close call. But then if business sentiment improves and consumer sentiment improves, then we're back to firing on all cylinders. Obviously, the AI thing, there's so much spending there. It's so big. We probably need some meaningful developments there where people start seeing it in their daily lives in a way that they can connect to investing and not just a new tech tool. But like I could see the pieces falling into place and lining up for a lot of growth going forward. But like, yeah, like you said, for the time being, we are getting a C economically, and we're talking to the teacher that's standing on the desk, being like, "I believe in you. You guys can do it." And maybe this turns into an A economy. Maybe we keep floating with a C, but barring some catastrophe, I don't see the economy falling apart.
Yeah. Okay, let's just a second, let's welcome on Mike Cintolo, our guest today. Before we do that, we have a special offer for today's listeners. If you go to cabotwealth.com/street, it's our 4th of July sale. We're offering Cabot Prime Pro, which gives you access to just about all of our investment newsletters here at Cabot. Special introductory offer, 90 days for just $90. It's a dollar a day by my math. Um, Usually it's, if you buy all these services individually, it'd be thousands of dollars. But if you order today by going to cabotwealth.com/street, you get it again for 90 days for $90. You get access to 16 investment advisories, Cabot Growth Investor, Small Cap Confidential, Early Opportunities, Dividend Investor, Income Advisor, My Stock of the Week, everything. Special reports, your complete guide to investing for retirement, truth about AI stocks, secrets to early stage stock profits, etc. And you get access to all of our analysts, all of our email addresses, all of whom you've heard on this podcast before. So again, go to cabotwealth.com/street to get your 90 days for $90 offer. Okay, let's pause for a second and then we welcome on Mike Cintolo. All right, we welcome on Mike Cintolo, Cabot's Chief Investment Strategist and Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. He's also the one of our most frequent guests. Who's the most frequent guest on like Carson or Leonard? I'm trying to. I wanted to say Ed McMahon, but he was the actual guest host.
Right. Right.
Yeah, I can't
Yeah.
think of who. What's his name? Letterman had on the workout guy, Richard. Uh,
Ri- Richard
Richard
Simmons?
Simmons from
yes, he
uh,
had on Richard Simmons every month. I feel
way
like
back.
so. Yeah, you're the Richard Simmons of this podcast. Uh,
Wasn't that a comedy show? Like, I feel like I was not a big Letterman guy, but I thought that they were kind of comedy forward. It seems wild to me that Simmons was the
He
real.
had him on just to make fun of him because he would
Oh,
wear the exercise get up
Yeah,
and
yeah.
be all oiled up, and
A
Letterman
lot
would
of,
just have him on to make fun of him. And he played in Simmons's. In fairness to Simmons, he played along well with it, pretty well with it.
yeah.
if I'm going to just put a pin in the Letterman thing. Go look for Bill Gates on Letterman explaining how the internet works in the mid 1990s. The level of skepticism that Letterman had towards the internet as a concept, it aged like milk. It did not hold up very well. But I think that's enough Letterman chat for.
Yeah, it's we're definitely dating ourselves. Okay, so Mike, the market is as of right this moment at trading at all-time highs or all-time intraday highs. We'll see where it finishes the day. Um, it feels like things have improved, especially in the last couple of weeks after sort of going sideways for a while. You had mentioned last time we had you on, and you've been writing this, really for weeks, that you weren't, while the market was inching upward, you weren't seeing a whole lot of leadership, especially on the growth stock side. Sounds like maybe that's changed. Is that right?
Yeah, I mean, this week's been very encouraging. I mean, you can never declare victory. I just recorded the video, where it's like you can never declare victory because next week could turn tail, but just you have to go with what's in front of you. And to come in this week with the, weekend shenanigans in the Middle East, and everyone was kind of expecting down, and for it to be a really nice week for the market, for the indexes, for all indexes, and for, yes, I'm seeing more stocks start to lift out of either tight areas, sort of like secondary entry points, or kind of emerge from their initial bases and stuff like that. Again, there's no guarantee, but and in short term, it's probably a little sticking straight up in the air. But yes, I do find that pretty encouraging on the individual stock front. You know what I mean? Um, Bigger picture, I wrote this in yesterday's issue. Growth Investor was, it's almost like the first, as we kind of getting out of the first half of the year here, it's almost like the first half of the year has been one big setup. Even going back to December, you had the top among all the good news. That's when, Apple ovens at 550, whatever the hell it was, and stuff like that. And then you had DeepSeek, which kind of cracked things, but we didn't really crack until a month later. You had the crash, a little bit of a bottom, the blast off stuff, blast off indicators. And the last month has been, I know the big cap index has been sneaking higher, but the vast majority of stocks I watch have just been in these tight, relatively quiet, it depends on the stock, but right, like 10% range type thing for about 5 weeks now. And that's despite, there was like the US China trade truce part two or whatever
Yeah.
earlier in the month. And on the good news, obviously you had the interest rate thing, when remember Treasury, the long-term thing hit 5% or whatever.
Yeah.
And then, recently, of course, the uncertainties on the downside, but all that was pretty well controlled, which I thought was a constructive sign. And now we're starting to lift. So yeah, I'm not saying this is like the cannonball into the pool moment, but I just feel like it's definitely what I've been looking for. And the more we see, the better here going forward.
One of the things that I know you were calling out for a while is stocks getting rejected at new highs, individual names, especially like former leaders. And I know the former leaders don't tend to lead the next leg. But are you seeing that sort of die out? Are we seeing stocks sort of stretching towards new all-time highs or getting through that resistance? Where are you seeing, or what are you seeing there?
Yeah, so there's still some sell on strength bugaboo, meaning like things will stretch for 2 or 3 days and then they're not, which is okay. It's not like they're going up 5 points and then falling 12 or something like that. It's just more, they're not really, most things aren't really letting loose on the upside. But yes, this week, again, it's 1 week, so we'll see how it goes. But yes, I'm definitely seeing more like just Nvidias and the Broadcoms, those are mega cap names that are kind of stretching their legs, but just more like, Amerisport. Some of these things I've been watching, they just have been tight, and now all of a sudden they're either moving out to new highs or pretty close, and volumes picking up a little bit. So I mean, it's kind of exactly what I wanted to see so far. I mean, I guess I would have wanted to see everything go up on 500% volume and so on and so
Yeah.
forth. But realistically speaking, it's certainly, a step in the right direction this week. And I would say, short-term wobbles aside, but I would say if, 2 weeks from now, 3 weeks from now, this sort of thing continues, it would be very bullish.
Yeah, that was sort of my next question. You'd mentioned for a while that you thought a lot of your indicators were suggesting that the next big move would be up, but that there could be some short-term wobbles, maybe even a pullback. Do you think this is the big move, or like you said, the next couple of weeks might determine that?
Right. I'll let you know next time I'm on the
Right.
podcast.
Yeah.
No, I mean, I'm my biggest conviction is, and I just, like I said, the big setup, the blast off indicators, Ryan Detrick of Carson Group, I think, or whatever.
Carson
But
Research,
he
yeah.
had, I love the simple studies, and he had one that was said the S&P went up 20% in 2 months worth of trading
Yeah.
days, I guess, not 2 calendar months. And of course the returns were great. I mean, otherwise you wouldn't post the study. But to me, it was like it only happened a few times, and it's 1975, which is like a generational low. It's 82, it's 2009, it's 2020, it's 98. I'm not saying this is a generational low. We're going up for 20 years, but I'm just saying, you know, I think the odds are very good that, within the next 6 to 12 months, we have a big run in the market. Um, I would have rather seen a little bit more of a shakeout here to shake the tree, but I mean, sentiment is still pretty tame in my mind. So I'm just kind of going with it. If the stocks draw me in, I'm buying. If they fail, I'll cut it, that sort of thing. And if they work, I'll hold to them or add to them. So I'm just kind of going with it. Whether how it plays out exactly, I'm not going to predict. But yes, I'm encouraged. This is what we wanted to see. Usually, if you have a big thrust higher, it's hitting new highs or near its old high or whatever, and then it goes super tight for 5 weeks. That is good. That's usually a sign of accumulation by big investors. There's not a lot of stock coming to market. So when it dips, somebody buys it. So
Mhm.
there's not a lot of supply basically. So now if somebody wants to go buy it, they have to pay up for it. There's not a lot of supply for the stock. So that's kind of how it works. That's what it looks like is happening. We'll see how it goes from here.
I mean, you mentioned that, with there is some new leadership developing. Are there particular sectors where you're seeing it develop more than others?
No, which is kind of what's interesting.
Yeah.
When I'm doing the video every week, it's like, there's some that are still like medical, still hit and miss, but even there's a few that are working. Like retail's been hit or miss, but then there's a few that look good. They're setting up anyway and look good. So it's kind of all over. Obviously, AI and I'd say crypto or stablecoin, whatever you want to call that sort of theme, blockchain, I guess, is pretty strong. But no, it's kind of all spread out, which is what it's encouraging. It's not the big cap stuff is definitely leading, and AI stuff or whatever, but there's definitely a lot more breadth than I saw, 5 weeks ago, for instance. Yeah.
Yeah, the stablecoin thing is interesting. I'm,
Yeah.
watching Circle run up several 100%. Part of it, at least in my mind, feels a little bit like there's not a clear consensus in the marketplace as to what like the next sort of big picture macro trend is going to be. Um, and I guess maybe that just piggybacks on what Chris had asked about sectors, but is it still AI? Do you think that's still the big sort of meta narrative that is driving the market now?
Yeah, I do. I do. And I do think there's I mean, we don't really have any, a lot of the blockchain stuff out there. There's more coming out, which I do feel like there will be more institutional liquid plays as opposed to like, a lot of these small things like Riot or whatever.
No.
But with that said, no, I do think AI, it's just that we're not in the first inning or whatever. So, I mean, one of the comparisons, this has been thrown around online, but not to go on a tangent, but like 1998 was sort of toward the end of that secular bull market. I'm not drawing too close a comparison, but I'm just saying there was a huge sharp sell off. The internet thing had started, like Amazon had really cranked out, Yahoo had had a big run, AOL was coming forward, Schwab was starting to pick up, and then we had long-term capital management and the Russian ruble and all this crap. And so we fell 33% in like 12 weeks, 11 weeks. And then we just went nuts. And that was sort of that was really the internet bubble from there over the next 18 months. I'm not saying that's exactly what's happening, but I still, my point is that AI inning 1, 2, 3, 4 or whatever in the stock market is probably over. But, maybe now we're in inning 5, 6, 7. And you're starting to just see other areas and other stocks that either have come public. It's not just, I mean, Nvidia is breaking out here, but it's not just like Nvidia and a couple other stocks. It's starting to broaden out to what about inferencing? What about power? What about this? What about that? That all that sort of thing. So
Yeah, power's been
Sorry, go ahead.
power has been sort of a wild sector to see go nuts on the upside. It's always been such a stodgy,
right.
slow mover. With obviously like when lithium batteries broke out, like lithium was a big subsector, but it's been wild to see just like electricity generation is the wave of the future.
Yeah, yeah. No, I think that I've never been a huge thing with the utilities like the CEGs and the VST, but there's no question that I don't want to mention the company because we have it in the portfolio, but like, there's been some talk about how it's kind of like similar to the industrial build out. Really, it's the biggest thing like that, but it's global. So I think it's a long lasting trend. The market's going to discount it ahead of time. By the time the market peaks on this stuff, there'll still be years worth of progress in the AI field. But yeah, AI blockchain, but we'll see what happens. The market, it's still relatively fresh. I mean, I don't want to say like it's just breaking out, like the indexes are just, it's not the first week of the rally or anything like that. But, I'm optimistic. I am. I'm optimistic there's going to be another round of big winners. And I have to admit, after last year, which was a huge year for growth stocks, like one of our best in 2 decades, usually after that, the year is choppy. There's some sort of reset. And usually that comes from like a grind, which I hate, just like 9 months of just like nothing really going, just up and down, up and down. This one was bad. I mean, nobody wanted a big correction, but we had it, wipe out, negative sentiment, and now back up. And a lot of some former leaders and a lot of newer names doing well. So yeah, I'm optimistic heading into July 4th.
Speaking of newer names, without giving anything away from your portfolios, is there a stock or two on your watch list that you're high on right now for the next, 6 to 12 months, just to throw our listeners a little bit of red meat?
Yeah, yeah. I think so. Not on my watch list, but I'd say, I mean, I watch a lot of things, but not officially that I wrote it on the watch list. But I am intrigued with like this is not my type of stuff, but Oracle like really got going. They have a huge cloud business, and just one of my old trading rules is just you never underestimate a huge stock that has massive like overwhelming buying volume on like news like that. And Oracle did. And they're the growth of the entire business should accelerate, and of course the focus is on that. So that's sort of one in terms of things I am watching outside of AI. But I mentioned Amer Sports. It's a retailer. They have a couple like outdoor, I won't say athletic, but really like outdoor gear, hiking, all that sort of thing. That's selling like huge in Asia. It's actually a conglomerate. They own like Louisville Slugger. They own a bunch of Wilson. They own, but it just came public a year or two ago. It had a nice run. It got hit with the tariff fears, but that's one of these ones that came all the way back, huge volume, and that's just gone tight as a doornail. It's perking up. That's AS, and a name it's thinner, but I might take a swing at it. We'll see. Life 360, which a lot of people here might know, well, or maybe their kids know, if they have grandkids and stuff. Just a way to like better track and stay in touch with your family, which sounds a little big brotherish, but if you have kids these days and they're out and about, you like to know where they are. And they can send alerts, and they're monetizing the free base. They have a bunch of paid users. It's global. And the stock looks same sort of thing. Big correction, huge comeback, big volume, sales earnings is all there. And then it's just gone tight here for 4, 5, 6 weeks. So those are some names I am watching. And I have to be honest, our portfolio is pretty, I have some cash, but in terms of the number of positions, it's pretty full. And the reason I have cash is we still have maybe 3 or 4 small positions basically that we could average. So if those kick into gear, we'll average up. We'll have no cash left. But Yeah, there's definitely more and more names. 5 weeks ago, it was like there's not a lot of names that aren't, that are really breaking out or pulling back, and you're like, geez, I really want this. Now there's definitely a lot more things that seem to be working.
Mike, thanks for joining us. I know you're about to head out on a family cruise. Is that right?
It's my parents' 50th anniversary, so they're taking half of Massachusetts to on on a nice cruise. So we'll see. It'll be an adventure. It always is. But I'll stay in touch. Hopefully the Wi-Fi on the ship is good enough to paid for something. So hopefully it's good enough to stay in touch, get a little work done, but not too much.
Yeah, hopefully not too much. Well, yeah, and we mentioned that there's no podcast next week, but the 4th, but we will be having a webinar, free webinar, on July 2nd, next Wednesday, hosted by Brad. I'm also out on vacation next week, but Brad, you will be having on Cliff Droke, our turnaround letter chief analyst, and Tom Hutchinson, dividend expert, and remind me of the third one.
Jacob.
Jacob's
Jacob
on it.
Mintz. Oh, options extraordinaire. Yeah. And that is again on July 2nd, 2 p.m. Eastern. It's three experts and their top picks for the second half of 2025. You can find that on the cabotwealth.com website under webinars. Um, Mike, thanks again. And yeah, it's good to have you on during happy times, at least for the market. And hopefully the cruise will be just as happy times for you.
Thanks, boys. Have a good fourth because I won't see you. So have a good week, and I'll be back at it later.
All right, sounds good. Happy 4th, everyone. We'll see you again in 2 weeks.